Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with an important update with Marin Katusa. He's the Chief Energy Strategist for KC Research. He's also partnered in a few funds, one of which is with Rick Rule of Sprott Asset Management and Doug Casey of KC Research. Marin, I want to focus on UEC. We've talked about it and covered it in the past, and it's seen a 45% price decline. First off, thanks for joining us.
My pleasure.
Marin, what happened to UEC, especially in the past few days where we saw the price sort of collapse at that $1.25 level?
Well, essentially, there's a large website that millions of investors look at. It's called seekingalpha.com. And on that website, they featured an article that, I published on it to our own subscribers, stating that it was very one-sided and essentially very sloppy reported. My opinion is that this was almost written as a support for the shorts. And it was interesting how big the short position got on the stock. So it had a very catchy title, basically saying significant shareholder dilution ahead. And the author never actually even contacted the management, so we followed up right away, picked up the phone, talked to the management, and they were totally caught off guard. They did not know the author. No one contacted their office. And the author basically made a lot of assumptions. The first assumption was that the company did a shelf prospectus. Now, a lot of companies do this way ahead of time. And what you do that is, the last financing that UEC did was in October of 2013 with some very large investors. The smart money went and financed through a private placement, through equity raise, and it was done at $2.10. Now, at that time, the company had a lot of money offered to them, but they didn't need the money at the time. They didn't want to dilute anything, but they said, you know what, let's be prepared because the legal aspects take a lot of time when you're dealing with the regulators to prepare the right documentation, that if you do get a big raise or if you do need it, your legal works, you've ticked all the boxes, you've crossed all the T's, and you've dotted all the I's, and you're prepared to go and raise the money. Now, because they did this, the company decided on that prospectus last year, and they're talking about this now in April. Well, the company is not going to be raising any money. So right off the bat, the whole premise of this article from the title is wrong. Then the next thing they talk about is the debt payments, the facility that they did with Li Ka-shing, who's the wealthiest man in Asia, the smartest fund manager in Asia, is Warren Gilman. He used to run CIBC's International Resource Banking Syndicate, and he runs that fund. And then Rick Rule, my partner, also is involved in the facility through Sprott. Now, what Amir did was very intelligent. Rather than the way this author reported it to make it a sexy short story, the truth was now that Amir's final principal payment is July of 2017. This article says that it's due in July of 2016. Again, and they didn't even actually mention the month, they just said 2016. So the irony here is that UEC is now trading cheaper than companies without permits, without production, without a production facility, and it's cheaper than companies that just have moose pasture, non-economic projects. So the irony here is this: because of an article that gets a wide exposure on a big website, the market took this and just read the title because we live in an impulsive, quick reactionary world, and then the algos took over. And you can look at the trading that it's not 10,000 shares and 5,000 shares and 2,500 shares or 50,000 shares. It's 100 shares, 300 shares, 200 shares, 100 shares. It's computer trading, and the computers don't understand what true value is. So the irony of all this is the Hobson and Palagana plant that Amir strategically now advanced. When he bought it off the company that eventually was bought off the Russians, just the book value on the Palagana and Hobson plant is bigger than what the whole company is today. So that gives you a perspective of how cheap the company is. And here's a little bit more insight. That Hobson plant and Palagana When Uranium One bought it off of Energy Metals in 2007, it was valued at over $500 million. Okay. UEC is the only uranium producer in the world that is unhedged. And the article talked about how they're not hedged. That is a smart thing, because when you're in a weak market, you do not want to deplete your reserves with no profit. There's only 10 producers of uranium in the whole world. UEC is one of the lowest cost producers, and they were the first producer in September of 2013 to say, you know what, this doesn't make sense for any producers. The spot price is going to go down. We're going to pull back our production to preserve our reserves, so in the future, when the uranium does go up, we have the best leverage. After that, Cameco came out and said it. That's the world's largest producer of uranium that's publicly traded. After UEC set the stage, Cameco followed, then Paladin followed. The Kazakhstan national company said, at these prices, we are not advancing any more projects. So the point here is that this article had a lot of misinformation in it. It had a catchy title that ironically was wrong, but the shorters took over. And it's been a fantastic buying opportunity for our subscribers.
Do we even know who wrote the article, or is the blogger anonymous?
No, there's an author on it. And because it was such a cleverly written with a short angle on it, he does disclose that he's long other companies. And the irony of this is look, Casey Research has a policy of not talking bad about other companies that we don't follow. But I'm one of the few guys in the business that has been to every single North American producing project. Okay? And I've been to the assets that he's talking about are great, and he doesn't understand what the problems are in the full production cycles. So the irony here is that the Hobson processing facility, which can process up to 2 million pounds a year, first of all, is the largest functioning processing facility of any company in the U.S. under $1 billion market cap. Okay?
Wow.
On top of that, to build that plant alone would cost more than the whole company is trading at today. Never mind the other 78 million pounds of uranium plus the permitted Palangana, the fully permitted Goliad. This is amazing. This is a fantastic buying opportunity, and that's what we have stated in our publications.
Marin, I assume at this point the biggest risk now for UEC is that uranium does not go up.
Dan, you nailed it on the head. The biggest risk right now is not the operations, it's not the permitting, it is not what all the other companies are facing who are trying to develop these projects. UEC has positioned itself to be able to increase production and make it available because they're functioning, permitted, they have everything ready. The key is where will uranium go? And the reality is this. If uranium does not go up higher within the next 12 to 18 months, 20% of America's baseload power is going to be at risk. Now, why do I say that? 50% of what the Americans consume today for nuclear energy comes from Russia. That was based on the old agreement. America imports more uranium from Russia than it does from Canada. Canada is second largest. The reality now coming out of Cameco is they cannot make money at current uranium prices. So the reality is uranium has no choice, because the cure for low prices is low prices. Now, I don't know if it's going to happen in 2 months or 6 months, but Japan shut all their nuclear reactors off. That's 48 reactors offline. They have come out and publicly stated, we are bringing those reactors back online. China is going out aggressively and trying to secure long-term agreements for their nuclear reactors, because I was just in Hong Kong a week ago, and China has the highest asthma rates in the world because they're burning too much coal and too much gas to create electricity. They understand and they want what America has, which is clean air. The air apocalypse that is occurring in Asia right now, nuclear energy is a cure for that. Just like it was in the U.S., where 20% of America's baseload power is nuclear power, it is not going to change, and the rest of the world wants that. There is not enough uranium right now in the world to satisfy where the world will be in 10 years. So will it be 6 or 12 months? It really doesn't matter, because if you're a speculator, you want to buy things very cheap, and you want to be positioned to the unhedged companies because they will have the maximum exposure when the uranium price does pop up, and it will.
Marin Katusa, thank you so much for joining us on this update in light of the recent move of UEC. If someone wants to learn more about your newsletter, where do they go?
Just go to the Casey Research website, and you can have a 3-month free trial, and every Tuesday I write a missive on my thoughts of what's going on in the energy world, and that's all free. There's a lot of great info on the website.
Thank you for your time and all the work you do.
All the best.